Hey again, everyone. One of the coaches at Unga Academy here, and welcome back to our usual chat about our portfolio strategies that have performed the best over the last period. As always, before we get started, I invite you to please leave us a like to this video, subscribe to our channel, and click on that little notification bell so that you can stay updated on all our new content. Ding ding. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alright, so today we're going to be talking about the soybean market, a market that belongs to the grains market, and I'm going to be showing you two strategies for this market. The first one is a trend following strategy, which is the one that we're looking at now. So this strategy enters at the breakout of a level that's calculated starting from the day's opening price, plus or minus a factor calculated on the range of the previous days. Should the market exceed this level, which is calculated as a distance from the day's open, then we'll enter long. Conversely, if the market from the day's open starts to decline until it touches our level, well, then we'll enter short. The range on which we'll calculate the distance to enter long or short will simply be the difference between the high and the low of the previous day. So we'll take this difference, add it to the day's open, and at that level we'll enter long, while we do the opposite for short entries. So we'll take the range of high D1 and low D1, meaning the highs and lows of the previous day, and then subtract this difference from the day's open. Should the market go down and come close to breaking this level, then we'll enter at market. So this strategy has worked quite well over the years. Only the last 2 years have been uploaded here, starting from the beginning of 2021, so roughly a year and a half. You can see that the first part of 2021 was quite positive indeed. Then the end of 2021 and the beginning of 2022, well, were less rewarding, while the last 3 to 4 months saw the strategy returning to perform very well. The average trade of the system is quite high. It's a multi-day strategy, so you can get some good results. Obviously, $350 isn't the norm on this underlying asset, but an average trade around $150 to $200 could even certainly be able to cover all the costs needed to trade this market. Now let's turn to the next strategy. This is a bias strategy, so it differs from the one I've just shown you. Instead of entering on the breakout of specific price levels, entries and exits occur at certain times of the day. As you can see, we're using a 7-minute time frame, so we have 7-minute bars. Now this is intended to try to limit slippage, which on this market anyway should be quite limited since contracts traded exceed 100,000 pieces each day. The short side of the strategy will enter at 4 a.m., while the long side will enter at around 1 p.m. Then, since we're on a 7-minute time frame, you'll have to select the correct timestamp for the bars. So we used 3:58 as the time for the short side entry and 12:57 for the long side. These times all refer to the Chicago Exchange timetable for the grains market. So these times will refer to the Chicago time zone. The trade will be closed around the entry of the other side, so simply the long trade will be closed when the time window of the short trades begins, and vice versa. This strategy has also performed well over the past year and a half. In this case, we see smaller average trades. And this is because this strategy stays in the market just a few hours. Plus, the soybeans market has a volatility that isn't so high. So it isn't easy to stay a few hours in the market and get a good average trade. In this case, we can see that the long side definitely fared better than the short side. We see an average trade of only $20. In contrast, on the long side, it's as high as $140. Now let's look at the overall equity of both lines. You can see that even in this strategy, in the final period of 2021 and early 2022, it struggled a bit. But then here, in the last few months, it's managed to reach its equity peaks again. The long side, as mentioned before, has certainly brought better returns. On the short side, on the other hand, there have been more ups and downs in recent times due to the strong bullish bias characterizing the commodities market in the last months of 2022. Well, guys, if there is someone among you who is interested in the world of systematic trading, I suggest you click the link in the description below. From there, you can watch a video of Andrea Unga, get our best-selling book by just covering the shipping costs, or even book a free call with a member of our team. And if you like this video, please be sure to leave us a like, subscribe to our channel, and click on the bell so that you can stay updated on the release of all our new content. And with that, we'll see you again very soon. Thanks a lot. Bye-bye.